Aloha everyone, Joshua Hayes at bigwavetrading.com. The last video lesson that I made public on YouTube, I gave out a swing trade MRX, and I have to admit it's doing great. In the past 5 sessions, MRX is up 10.70%. The SPY is up 4%. The QQQ is up 6%. So MRX is definitely doing what I wanted it to do. Now, I let you all know in that video lesson that I made this a 2R capital at risk trade instead of a normal 1R because of the quality of the signal. However, on Monday, an immediate down session, it triggered and filled me. Now, I was kind of hoping with the market gap down, I wasn't going to get filled above my buy stop. And if that would have been the case, if it would not have triggered on Monday, it would have triggered on Tuesday, and it's just nothing but gains. I still have the full position. But in full fair disclosure, after this down day, I immediately decided to reduce 20% of the position with the market sell order at the open the next day. So I immediately got out of 20% of it, which guaranteed I would only lose 1R of the trade. It could have been a full 2R loss if it would have cracked that 50 SMA on Tuesday because I had a stop on the books, but it didn't. It held, got lucky, I guess. It's just a system. If I would have lost the full 2R, I was prepared for it. I would not have been upset about it because I had that plan going into the trade, knew what I was doing, and accepted that risk. If I couldn't have accepted that risk, it would have been a different situation, and I need to draw up a sizing replan moving forward. But as it was, I sold 20% immediately at the open, and since then it's been straight up. Now, following yesterday's session, I decided to sell a little bit more. I don't think it was a full 20%, but it would have been around 15% at the market this morning. And after Friday's session, I will be selling another 20% of the position at the market open on Monday. And now my final stop is break even. This will guarantee a green trade. But this was a heavy trade, and I'm not going to lie, I haven't had over 50% of my account capital in one trade in a very, very long time. MRX initially got that following the 20% sell at the market on Tuesday. It was under 50% of the entire account capital, but still a very nice trade. I wish it would be a full 100% and wish I was still long the whole amount for a sell at the market open on Monday. But with the market environment as it is what it is. So MRX working great. Congratulations to everyone that joined that trade. And what I'd also like to make mention is initially it was a long signal back in October, and I was long here. And if you would have joined me on this trade, you're up about 65% still on the position of whatever you have left. I got all out after it closed this day. Now, it wasn't a 100% sell signal because this bar right here was the first close below the 50. If there would have been another close below this low, it would have been a full sell signal, especially if it would have had red bop. And there's actually a good example of that today. TMUS is a 50% end of day sell signal. This was the long back here. It still has a gain of 40% since that signal. However, even though this is another close below the 50 SMA, why this is not a 100% sell signal is because we're still above this high and well above an uptrending, strong uptrending 200 SMA from the original long signal. Now, obviously, whenever it closed below this low here, or move below this low, because my stops are good to cancel, so they're live intraday, I was knocked out of the position here. TMUS on an end-of-day basis is triggering a 50% end-of-day sell signal. Now that it has that huge volume in the red bop, all it needs is another red bop candle close below this low. And even if it isn't below the 200 SMA, that would be a 100% end of day sell signal. So that's an example of a sell signal. It's the only one we had this evening for Monday. I don't have any new long swing position trades. In fact, MRX, I do believe, and I do know actually, was the only long signal. There were no new long signals despite how strong the market was this past week, just because I didn't get any of my kind of setups. They need to look more like MRX. Now, if you don't think that I didn't participate in the uptrend, I'll remind you the quarterly portfolios always have 10 stocks, 10% of capital hold for 90 days. There is no selling of those positions, no matter what the market environment is. It's just a reconstitution every 90 days. And in that portfolio, I do have CRWD, which is hitting a new high. I do have Netflix, CRWD, which is not hitting a new high, but the relative strength line is hitting a new high, showing relative strength to the market. And I have Netflix, which is one of the 10 stocks that has 10% of the account capital hold for 90 days in that portfolio. And you can see it's at a new all-time high. So that area is covered. On top of that, PLTR is one of my 5 stocks that's a forever hold for now. I mean, in 5 years, we'll see if it still is. But for the next 5 to 20 years, I would consider this a quote, quote, forever hold based on the current management and structure of the company. When things change, I change. Those 5 stocks, they're currently all still on that list, but they could easily come off and or another stock could replace it. Another stock that could replace it that is in the long-term portfolio is Uber. So Uber's in there, PLTR's in there. I got to admit, the one stock I don't have in my long-term portfolio or quarterly portfolio that I wish I did was Spot, but here's something else I'll show you. It was a new swing long position back here. On an end of day basis, it's up 203%. Ask me, do I have a position in it? Not anymore. Do you know where I was knocked out? Right here in July. It has never triggered a 100% end of day sell signal. Another thing that I'm thinking of doing is running one of my swing position accounts only using the end of day sell signals. So I'll only sell 50% when I get a 50% end of day sell signal. I'll only sell 100% of the position when it fails after initially showing gains. We'll see. That's how I used to trade, but I don't trade like that anymore because of the way the market is. The algorithms, volatility, market structure has changed. So I changed to having good to cancel intraday stops. But I also have Tesla in the long-term portfolio, forever hold. Looks like it's bottoming. I also have CMG in my long-term portfolio. That looks like it's bottoming. So there are some positives out there. And then I'll show you the stocks in my weekly squeeze scan. There's 9 stocks now, and CXW and GEO are 2 of them. I'm watching these closely for swing setups as the story makes sense based on the current executive branch and the administration. So I'm watching these for setups, hopefully in the near term. Earnings are coming up, so you got to keep that in mind. But we'll run through that list at the end of this video lesson. Melly is another strong name, and then Groupon. I don't have a position in. I think Melly is in the long-term portfolio, so I do have Melly in the long-term portfolio, but Groupon definitely is not. But another name with strong relative strength. So there's stocks out there. I did have one potential swing trade yesterday, and I didn't take it. JELD. I love that volume surge with the max screen bop and pocket pivot point signal off the lows. Could clearly have taken a position like I told members when I made the video lesson, risking the 52-week lows. And so far, it's holding or working out, kind of a confirmation day. There's just too much distribution and red bop in this chart for me, guys. So that's why I'm not taking JELD. So I continue to think that this is a day trading market. The swing position names should set up more and more as we move forward. I would love to see stocks like PLTR, Uber, Dash, and Spot set up, with double bottom with handle patterns to get long. I would love more stocks to look like MRX with that bop and volume surge right at the 50 SMA and 21 EMA. More of those kind of setups, but I still think this is a day trade focus market. And I'm going to remind everybody also, in case you don't remember, in the long-term portfolios, I did my first nibble on the way down on March 7th when we bounced off the 200 SMA. When we cracked it, I was like, uh-oh, a little too early. But remember, this was a nibble. I made it very clear it was a nibble. 10% position sizes, max 20% in my favorite names, which are actually higher, like PLTR, than where I nibbled them. And then whenever we had this crack here, and this is all posted on the long-term portfolio tab for members, I went a little bit larger, and then I told everybody taking a much bigger bite now, and then after this session, all in the long-term portfolio. And the game plan with that portfolio is if the market does roll over to new lows, I'm moving cash from my bank accounts into the long-term portfolios, and I will buy panic the next time around, knowing that in 5 to 20 years, the market will be higher. It always is. So I'm actually going to go over to my telechart version 25 charts because I want to show you something. The QQQ today, this is the anchored VWAP from the highs, is closing above that anchored VWAP high. It's also closing this support level, becomes resistance, is closing above that resistance level. So we have a higher low above the 21 EMA. We closed above the 21 EMA yesterday. We're above that resistance level and the anchored VWAP. These are all excellent setups, but nothing says we can't reverse at the 50 and the 200 SMA, and we still have all of this overhead resistance to get through. So I remain open-minded to any and all possible outcomes. Though I will say the Zweig thrust, there was a super breadth Zweig thrust this past week. And I will also say this. I think it's 18 for 18 from these super Zweig thrusts or whatever I read, Zweig thrust, rhetoric. But we're in a new regime where algorithms, if enough banks, mutual funds get together and decide to buy the entire market to trigger a super Zweig thrust, I don't think it would be so hard with how quote, quote, illiquid the overall market top of the book is now compared to how it used to be before algorithms dominate. So I respect the Zweig and the super Zweig thrust. I mean, Marty Zweig is the GOAT. I mean, read his book. It's gold. It's gold, gold, gold. And I use a lot of his macro principles to help direct me. Are we in a QE, Q2, QT environment? Are we cutting rates or rates hiking? That tells me when I should be selling uptrends or buying downtrends. If we were in the middle of an interest rate hike cycle and quantitative tightening was rising, I would definitely not be buying these panic drops in the market. But because of Marty Zweig, I do. But just to let you know, it could be easy for algorithms to create a false signal nowadays. But the QQQ above that resistance line and the anchored VWAP. And when I look at the SPY, same thing. This resistance line is still above, so that's still there. I forgot to adjust these lines. So that resistance level is there. But if you look at price today, closing above the anchored VWAP from the highs. So those are definitely some very positive developments. Now, the last thing I want to look at is my weekly squeeze scan. I now 11. So it actually, since starting this video, it was at 9. I now have 11 stocks in there. Excuse me. CXW is one of them. It's in my weekly squeeze scan. If you don't know, it's looking for a weekly squeeze above the 21 EMA. And these red dots are what makes this weekly squeeze. So the red or yellow, either are good. So CXW is in there for me. I would love to see this one now form another handle, and it's definitely actionable. AGX doesn't quite have the liquidity and look that I like to see. ATGE is a leader. I'm very interested in this one. I need to see a longer base, and then it could be actionable with a buy stop above this recent high. I'm not taking any positions in any of these yet. I'm not setting any good to cancel buy stop orders yet, but I am paying attention. GEO is another one that I'm looking for it to go a little bit higher, hopefully form a handle. Would love to do a buy stop on that. APEI is an education stock just like ATGE, which is why I'm not that into it. UTI, I'm not that into. Grind, never short this stock, guys. If you if you don't know what grinder is, I don't think there's ever a bear market in that sector, if you know what I'm saying. CRWD. Now, this is one you guys know, long-term portfolio, quarterly portfolio. Love this stock. It's in the weekly squeeze scan. So this is one also. I would love to see this now form a handle. It would be very interested in setting buy stops and getting along this stop. TARS is in there. No real interest in that. Roblox. We all know Roblox if you have children. Definitely interested in this one. Has the earnings and sales growth along with CRWD. I would love to also see this one get a little bit higher, form maybe a double bottom or cup with handle pattern, whatever you want to call it, and then set a buy stop on this one. But out of the weekly squeeze scan, really into CrowdStrike, really into Roblox, into CXW, into GEO. So they're not ready yet, but hopefully if this market, we'll see how we react on the pullback from these highs in the market, getting above this anchored VWAP. If we hold these lows, if we consolidate and or we can start trending above the 21 EMA with the lows of the intraday session being above the 21 EMA, would definitely like to take size in all four of these weekly squeeze scan names.